I'm Ellis Martin. Join me for a conversation with analyst Jeff Baker of CommonStockWarrants.com. Today, thanks to Jeff, we will learn about SPACs, Special Purpose Acquisition Companies, and SPAC Warrants. A Special Purpose Acquisition Company is a company that has no commercial operations and is formed strictly to raise capital through an initial public offering, or IPO, for the purpose of acquiring or merging with an existing company. Jeff, welcome to the Ellis Martin Report. It's been a long time since I've seen you, and almost as long since we have spoken. How have you been?
I have been fabulous, Ellis. And yourself?
I am doing swimmingly well. I'd like to give our audience a little backstory as to how you and I became acquainted, because I believe that was probably somewhere around 10 to 15 years ago. Might be in that order. You were hanging out with your dad, my good friend Dudley Baker, the originator of Common Stock Warrants, and I knew you before you had a real interest in the mining sector, for instance, and before you arrived to where you're at today. Since then, you have done quite a bit. It's not like you went to college when you were 18 years old or 19 years old. You came in a little bit later, decided you wanted to get into mining, and then you made a shift. So let's review your history.
I'd say a lot of that inspiration came from some conferences we were going to, the hard assets conferences in New York and San Francisco. And you really were faced with, at least in my position, was faced with a myriad of different avenues to go. I was already looking at the warrants heavily, and here I was at the conferences, and you had groups of economists, bankers, and geologists. I liked the mystery of the rocks. I liked the world of geologists, and I liked, honestly, their approachable nature in those events. So I went on to pursue a geology degree, furthered that through some graduate work at Penn State, and ultimately had to make a decision. Do I apply my perspective on economic geology to the finance side, or do I apply it to the looking for an ore body side? I'm naturally, because of my father, Dudley, and 45 years at this point of hearing him talk about finance, it just worked its way in naturally, and I have an aptitude for it. So it made the most sense for me to pursue this on an analyst perspective on the warrant side, originally focused in the mining, but found some interesting segues over, say, the last year plus with some of those mining plays being brought into special purpose acquisition companies, SPACs, and things of that nature. So I'm applying a lot of the economic geology background to the analysis of some of the more macro events, and something that I'm very comfortable with. So I developed an index to track these warrants. I still look for the mining ones that pop up in that space, and then you apply some of that mining knowledge to those targets. And no, it's proven very effective over the last 18 months especially. And, realistically, a lot of this still has to do with me doing the data work for Common Stock Warrants for a decade plus at this point. So all I've seen, digested, and lived and breathed for a decade was warrant data. As a scientist, my graduate projects were warrant projects, building dashboards to dissect and analyze things and find triggers. And so that's really all I did. So it's been an interesting journey that I didn't necessarily think would end up with me here. But as of right now, I'm very, very happy with where I'm sitting.
How has this knowledge directly brought you to a place that we call SPACs? And in that answer, if you can give us a description of what SPACs are, I'd certainly appreciate it.
Absolutely. And good question. So, about March of last year, maybe even a little bit before, we started to notice the influx of warrants coming into the database, and it was growing relatively exponentially. This continued through the year. So I found it imperative to find a way to target these. There were too many to do an effective analysis on the fly as fast as they were coming. And so I created an algorithm to actually go through this data, try and find markers of events, things to come. So that's really what brought me to it. The constant growth of the space, the SPAC asset class, it really was so explosive, it made it impossible to ignore. Now, a SPAC is a special purpose acquisition company. These are companies that IPO to raise X amount of dollars for the purpose of seeking a private entity and bringing it into the public markets through a reverse merger or an acquisition. Essentially, this money that they raise in their IPO is put into a trust. These are issued in units. The units contain a common share, and in most cases, a fraction of a warrant or a right. And so we see those units come into the market via that IPO. 52 days later, that unit splits, and now we get the common share and the warrants trading in the public market in full fractions. There's no 1/4, 1/5. It's full warrants in the market. So we are all buying in to the speculation that that company will find a target at that point. At which point, when they announce a target, we normally see a massive rally take place on the warrant side, followed by the length of time that it takes for them to arrange the vote, satisfy the merger conditions, and then the symbol changes and they go public. A recent case of this are Churchill Capital 4 going public with Lucid Motors. We've currently got Gores Guggenheim trying to bring Polestar public. We've had lots of very successful and very big names come to market in this space that used to be considered, I'm going to say, more of a backdoor to the direct IPO listings that most people are familiar with. Very much like the Rivian that's out there now. That's a direct listing. So they chose to bring that to market themselves and go through the motions. These are reverse acquisitions. So companies already exist. This is the structure. We're going to bring you into the structure and allow you access to the capital markets is basically the deal there.
If you're the privately listed company that is absorbed by the SPAC, what kind of control do you tend to keep over the company that you have after the RTO?
I'm going to say in most of these cases, from what we're seeing, most of them do retain the vast majority of that control. In a lot of cases, the SPAC is not required to buy the lion's share of these companies they're merging with. You can see deals where they only are taking on 10%, where a $60 million SPAC can be acquiring an $800 million SPAC or $800 million company. They're only taking X amount of the stake in that other company. I don't really have a lot of examples in front of me of where the intended target loses a lot of its control. I can say, well, maybe we had one recently with GNRS, Green Rose acquisition. I believe that was the intention, that the SPAC was going to take over management of that upon completion. That one in particular is actually in somewhat jeopardy right now. So whether or not that works out, I don't know. But typically, we do not see the private entities lose a lot of that control. They're going to lose some ownership, of course, but that's just the nature of M&A.
What is the risk to the investor as opposed to investing in a typical issuer?
Great question. If you're referring to the common share, you're actually issued a very unique downside protection. We call this the net asset value. It provides a floor for the investor on the common share, and this is not on the warrant, let me be clear. But on the common share, you do have a $10 floor that you are allowed to redeem for at the time the merger vote is taking place. So if you own a common share and it has not performed and it goes down to say 980, 970, well, you have the option to redeem that even a year later if that vote takes place, and you will get the $10 plus interest. So surprisingly less risk on the common side than most people would expect. And especially since people can park larger amounts of cash in those, it has become a relatively popular play. On the warrant side, just like most other warrants, we get no protection in those events. If the SPAC chooses to liquidate, close, not meet a target, or not meet their deadlines, we actually go to zero. So our downside risk is always a big goose egg, very similar to options. You either peg it right or you don't. I would say the exception with warrants, it's a little less on the risk side than the options. We have a lot longer life. At least in the current environment, we see very few liquidations, if any. We see a long period of a year plus available on most of these warrants, and that's provided they haven't announced a deal, because at that point, this warrant is extended to 5 years. So we really do have a lot of optionality there to play the game for a while. But in all fairness, the warrants absolutely 100% can go to zero if the deal does not get done or something goes awry. We just don't have a lot of current examples where that's been occurring.
So the algorithms that you've created for the portion of commonstockwarrants.com, the website where the SPAC warrant index exists, the algorithms really are predictives of what you believe could be the future without saying it predicts the future, because it really doesn't 100%. And they've been pretty good, and you've developed these organically over time, or maybe you can kind of give us the breakdown of how that science works.
Well, and I'd say part of that I can attribute to geology. I can definitely say that some machine learning courses on predictive methods to look for different deposits has absolutely played a role in how I looked at the machine learning aspect of outlying patterns. I can say that just the exposure to the warrant data for a decade allowed me to see trends. As an analyst for years at this point, I kind of segmented these down, created values for each block I felt was important, gave them a weight, gave it a value, and that produces me a list every day of the most undervalued to their peers warrants within the pre-DA phase, meaning they haven't found a target. And it lets me find things with, I'm going to say, a much higher degree of success than randomly picking out a 425 looking for a target right now. We're looking for markers that are actionable. We're looking for ones that don't necessarily take a year to see to fruition. We'd like to play these in 2 to 6 week swings. Ideally, that's the range I like to sit in, with the optionality in a warrant to be able to carry that out in a downturn like we saw through the course of this year. We had a major downturn from February until late August. And frankly, that long expiration date on the warrants was a blessing in disguise, allowed us to average these positions down. And whenever the markets flipped, we found ourselves in positive territory relatively quickly. So with the index, it really is meant to not just be a portrayal of, say, following what I'm doing. It's meant to be a tool that allows us the entry points independent of what I have done, because every day something is a better value than the day before or the week before. And so what I bought 3 weeks ago is far less important to me than what does the index say today? What looks like a hot target today for whichever one of our subscribers is trying to take advantage of that at the time. So it's really trying to create that rolling timeline for everybody to benefit rather than just following one person's trades.
So if it doesn't show up in your algorithm, chances are it's not a worthy investment and it won't even show up.
And there are outliers, of course. And I'll say that those outliers will always exist. You'll never catch them all. One that springs to mind right now is Metals Acquisition Company. MTAL is the symbol. That's the full team of Detour Gold heading that up. That is a SPAC. There are warrants out there trading on this thing. But the great example there is it never got flagged. I only know about it because I'm a geologist and I saw the team and said, hey, I need a piece of this. But it never got flagged because nobody wanted to sell it out of the unit. When the unit split, nobody sold their warrants because they also have this speculative interest on the future of that potential SPAC. Are they going to nail a lithium target? Are they going to bring a nickel play to market? So it's so exciting because everybody's in it at bargain basement prices. So while it didn't show up on the index, it was an explainable phenomenon why it wasn't on the index. So there will never be a 100% foolproof method. I'm convinced of it. As much as I do it, I try and find the reason we miss one or two. Luckily, we don't miss very many, but the one or two, those are really still where you use your independent analysis as an investor. And if you see something that sparks your interest in this world of speculation, at times you have to put your money where your mouth is. And that would be the same thing with GGPI. That was not necessarily on the radar. It hadn't been out long enough for it to get the flags. And I happened to be in a Polestar location the day before it announced and said, I love this car. So when it came out, I said, Jesus, we need to pay attention. We need to get the warrants here. And so ultimately, we did take a big position in the warrants. So yeah, some of it is still left to the analysis of the investor, but it sure does narrow down the targets for us. I got to say, we have turned it into borderline of religion. We check it daily.
And that's what you do when you're an obsessive religious cult. You think about it all the time and you tell everybody about it. And I guess it works in a healthy environment like the one we're in right now. I'm a smart guy. I like to consider myself a smart individual, but some things I'm dense about. And looking at the website, looking at commonstockwarrants.com, and then heading into the SPAC Warrant Index, even after listening to everything you've said, I'm interested as an investor, but I feel I could get lost and I want somebody to hold my hand. You don't do that, do you? Or do you?
I guess I kind of do. I do put out a morning broadcast every day. I do go through the index as if I was looking at it every day with the full awareness that I will not be making purchases every single day. But I do go through it and I look at targets and I say, if this was me looking today, this looks attractive. This doesn't. I normally go through the thesis as to why. Pull up the data. I go through every week and summarize new entries that I've made, why I've made them, things I feel haven't moved yet that could potentially still be great entry points for people. I talk about warrants all the time, so I can say that every audio is very clear. It follows through the workflow. It's something I try and actually get people to be able to recreate rather than rely on my interpretations. I'd rather give people the tools and let us all form our own interpretations. When it comes to warrants themselves, I would say if there has ever been an arena that is more comfortable than most to step into, the SPACs provide that because there is a general uniformity across the asset class. And when I say that, I mean the expirations, a lot of the events, they're known commodities. And in most cases, we are buying these just like we would any other equity, especially in the phase prior to them announcing a deal. We are buying them like any other equity. The transactions are very similar. So there's not a lot to get tripped up on. I think a lot of our red flags can exist once we have a target and once they are making the symbol change. So those are the big events I think cause the most consternation, the ability for deals to terminate, things of that nature. But where our focus is really on the magnitude of those early entries. We really are looking for the 39-cent to $4 runners. We're always looking for a 10-bagger. Everything has the anticipation of being a double or we don't touch it. That's generally my mantra going in. I'm happy with taking a little less, but everything I touch, I intend to be a double. And thus far, our average exits have proved that out. So I think we're sitting at about 126% on our average exits as of now.
Can you give us a couple of examples of SPACs that have just performed incredibly? Give us a couple of 30-banger examples, if you don't mind.
KCAC turned into QuantumScape. Most people know that story. That rallied up into the $70 range on the warrants. The DWAC just last month, that's the Digital World acquisition. That was the one that picked up Trump Media and Entertainment Group. That was a 44-cent warrant flagged by us. It ran to $80 48 hours later. Those are both great examples. You've got DraftKings. Almost everybody knows that story. That warrant went to the moon. And all of these are SPACs, by the way. So Nikola, while the story might have ended in a big ball of fire, I'll say that every warrant holder in that was out long before that blew up. So those were all success stories. Lucid Motors was definitely a 30-bagger plus, major success story. MP Materials, that was another major success story, $1.99 warrant to $32 plus. There really are so many examples, I wouldn't even know where to start at this point. We do have the examples of ones that have done awfully as well, but make no mistake, I think from our perspective, when we enter these prior to an announcement of a target, our success rate's just been phenomenal. And I kind of wish I was fluffing that right now, but I'm not. We just went through an ugly summer where if you had asked me the same thing, I'd say, we're in a lull right now. Well, it feels like we're actually entering our bull cycle again into the year here right now and could see some real explosive events take place.
And you're very agnostic, even though your background initially is in mining and geology. You've taken the algorithms that you've learned through that, what I call a dowsing sector, where you literally stick a stick over what you think is gold, and if it twitches, you've got something. That's really turned into something quite scientific right now. You're completely agnostic, aren't you?
Yes, 100%.
I'm on your website, and I'm through the SPAC Warrant Index, and I'm looking at your new SPACs added. What would I do with that list?
I'm going to say that 9 times out of 10, that list specifically is just a constantly running. These things come so often that list will not be the same in 3 days. It will have completely recycled. And just because people aren't saying it's about 25, we do get this many come in and out. These are all intended IPOs 90% of the time. So this is ones that are in the pipeline. Getting added, they have not yet given their initial IPO and received those monies into the trust. These are just anticipated to be coming to market. That's what it means by the most recently added. So we do track them prior to that IPO because some of these teams immediately develop a premium based around these prices. Some of them really are exceptional teams with prior performance. And so we like to know prior to them getting out there in the market, who's coming. And that was the case with the Kensington Capital that recently split. That is the team that brought us QuantumScape. And we stepped into that really early because of it around 69 cents. That was not that long ago. We're already sitting in the 90s. So these things move a lot faster. I'd say most of the audience listening to this that's in the mining space, a real great way to look at this is that you just take the super cycles and condense the hell out of them. We really are seeing that in this SPAC space, very similar cycles, but in a much, much truncated fashion. And so it's provided the same sort of crazy volatility at times, Yet the return to the cycles that are positive are not nearly the years out things that we're used to in the precious metal space. So that's been nice for us.
Okay. I'm still a novice in this. In fact, I'm probably as green as you can get with regard to SPACs, except for I know what it is now. And
Right.
we're talking about it, and there are still many people who don't. If I want to do what Jeff Baker's doing, do I just pay attention every day to your morning broadcast?
Either that I send out an email also that kind of recaps everything I've gone through that morning as well. Genuinely speaking, most people just come in, they go to the value index or the regular index. There's a little difference. I explain them on the site. We literally go down from top to bottom, looking for targets of opportunity, knowing that this has been indexed to bring the highest probabilities to the top out of hundreds. We're looking at no more than 25 in this top chunk. Typically, we're looking at about 10. Out of those 10, we'll find 3. If someone wants to follow what my interpretation is that morning, then sure. They just tune into the morning broadcast and I've gone through exactly what I'm seeing, looking at the same thing. That is really how that is easiest to follow the initial workflow, because I can't pretend that trading warrants or trading SPAC warrants in an advanced capacity is a simple strategy, but one that I do believe in the morning audios is pretty laid out. Exactly how I'm looking at something. Hey, look at this on the index. Hey, let's pull this up in the search history. Hey, look at the range that this has flags. Let's call that undervalued. Now let's double that for our price targets. It's a real walkthrough for how to use the system, really to avoid it being something that relies solely on my interpretation.
This, of course, is not a free service. You do charge for it. And by the way, this interview is not sponsored. It's an unpaid interview. I like to get an education every now and then. And that's what I call this segment today. And hopefully those that have been following this broadcast are getting an education. Jeff, what is the process to become a subscriber?
Well, if you go to commonstockwarrants.com, there are options for the monthly, the quarterly, and the annual. I'll always stress, send me a message on Twitter at SPAC Warrants. Always willing to answer any questions. I will say that the price point is primarily to discourage anyone from not being serious. It's also meant to prevent liquidity issues. So by limiting it, we not only have a price point, but we have a limited number of availability. And we do that to prevent 10,000 people buying the same warrants on the same day, which would otherwise kill our golden goose. So yeah, there's several aspects to that, but that is the best way to reach out. Send me a message. I am willing to discuss and explain what exactly it does, why it does it, and where it benefits you. No problem at all. But the website is always the best place to go. Feel free to hit the start subscription button, and there are options. So by all means, make yourself available to all of those, and feel free to reach out.
Jeff Baker, commonstockwarrants.com, old friend of mine. It's been a great pleasure catching up with you today. Thanks so much for joining me today in the program.
You too, Ellis. Thank you so much.
I've been speaking with Jeff Baker of commonstockwarrants.com. To delve further into the world of SPACs and SPAC warrants, become a subscriber to commonstockwarrants.com. Find Jeff Baker and chat with him on Twitter at SPAC Warrants. I'm Ellis Martin.
Thoughts, comments, criticisms, accolades, praise, admonishments, pats on the back, all welcomed. Email us at martinreports@gmail.com and tell us how you really feel.